good afternoon to our viewers from wherever you are watching us from. Welcome again to another episode of Analyst Insights. On this program, we are talking about financial markets, capital markets specifically, markets that are focusing on mostly our local market. So today I'm joined by my colleague Rufaro for today's program. Welcome to the show, Rufaro.
Thanks for having me, Ranga.
Good. So I'll start off with a quick rundown of what happened last week. So the last 5 days we saw a slowdown on the major markets, as you'd see from the tables and the graphs, where the leading market indicators in terms of the indices that we use on the local stock exchanges are showing negative numbers. So you'd see that the all share index is down by 11%, or at least the blue chip index, which is the top 10 and the top 15, were down by between 13% and just under 18%. So we are seeing that slow down again. That's linked to what's happening in the economy. Also related to that, obviously, is also a slowdown on the rate, which at some point it had peaked at around 9,000, but right now trades are happening just under 8,000. Maybe big trades happening above 8,000 or 8,500. So we want to talk about what has really caused that. In terms of the weekly trades, we are showing them on the screen there, where Delta, Mash, and Nampak were the big trades of the week in terms of the Zim dollar market. Obviously, Delta had the biggest share with just under 6 billion Zim dollars of trades, with a big deal in Mash recording 2.4 billion. When you look at the Victoria Falls Exchange, major trades were happening in Insco and Simbisa, about 360,000 US dollars of trades in Insco, and just under 170,000 US dollars of trades. And then the next best after those two, you see Padenga and Bindula just recording trades of around 1,200 and 4,000. So there's still very limited trading, but already we still seeing a lot of interest on that market. This is just to show you the power market versus the auction, where we continue seeing those numbers spiking, but with the slowdown that was spoken about. The auction rate, the current is shown there is 6,926 Zim dollars against $1 USD. And we saw a slowdown from the graph. We're actually seeing a dip that's happening on the orange line, which is your Zimbabwe All Share Index, slowing down because of reduced Zim dollar availability on the market. And in terms of the movers and shakers, the main activity in terms of gains were in FBC, Kafka, and ZHO, and then the big caps and the likes of Old Mutual, OK, and Mikos were some of the losers. Obviously, profit taking, but also people just trying to unlock liquidity for one reason or another. The slowdown that we've seen is actually also come at a big cost in terms of the market capitalization, where last week we were talking numbers around 600 million USDs for the likes of Delta. That number has gone down to 448 million USD, and Econet 261 million. So the market is actually becoming cheaper and cheaper, as those two graphs are showing you the activity. So I think the major talking point to follow this week has been the Zim dollar and stability. So the authorities are coming out quite confidently saying that we're going to see stability and the Zim dollar is here to stay. How do you respond to that?
Yeah, look, I think that if we just look at the last 5 years and the difference between what we hear from whether it's Treasury or the central bank regarding currency stability and inflation outlook, and what's actually happened, I think they've been very consistent in talking about currency stability, that inflation is going to trend downwards going forward, that the Zim dollar is going to continue to be a major currency and is not going to go away. But what we've actually seen on the ground is that we have runaway inflation. We now have a scenario of hyperinflation. We have significant devaluation of the local currency, not just on the power market, but also now in the official market. And then you can actually see, using the latest numbers from Zimstats, that only 24% of the economy actually trades in US dollars. And one of the things that piqued my interest listening to you go through the market summary is that if you convert the volume of trades in Delta to US dollars, at the official rate, it's about 900,000 US dollars, which compares to, the highest trades on the FIFEX was $360,000, So from a place where perhaps this time last year, the trades on the Victoria Falls Stock Exchange were very thin and were not comparable at all to what we were seeing happening on the ZSE, you can now actually see meaningful volumes happening in INSCO and Simbisa. And one of the differences is that if you hold Delta shares, from what you were articulating as you're going through the market summary, your value in real terms has actually come off in a substantial way. Whereas if you are holding Simbisa or INSCO, which are listed on the FIFEX, your value is holding firm. And those the sellers on the Delta, they get their Zim dollars in T+3 because that's the nature of the trading cycle. It's quite possible, the way the Zim dollar has been losing value in the official markets, that by the time the seller actually has cleared funds in their bank account, they might have lost another 10-15% of value. Whereas the seller of any INSCO or Simbisa shares is actually assured that their value is ring fenced against inflation. So I think we're starting to see the Victoria Falls come into its own in terms of the volumes trading. There's more migration to the Victoria Falls Stock Exchange, with Zimplow moving across, and I don't see anything, any of the statements that are being made regarding stability affecting the trend that we're witnessing, where the Zim dollar every day is becoming less and less relevant. In fact, one of the unintended consequences of the official devaluation that we've seen is that in places like Pick n Pay and other major corporate retailers, it now makes sense for consumers to pay in US dollars because they're not being severely prejudiced in terms of the rate. And I suspect very much that the ratio of their sales that is in US dollars would have gone up materially. So if the intention is for people to use more US dollars, actually what's happening in the major retail facing corporates and formal businesses is you're going to actually see more use of US dollars instead of Zim dollars.
Okay, so you are saying that the unintended consequences of the policies you are seeing right now is actually more transactions are taking place in USD. And talking about that number, we hear that as much as 80% of transactions right now are now in USDs. But the authorities, they are arguing that they've created a situation where there's going to be such a shortage, and the shortage is going to force people to move to the Zim dollar. Do you share similar sentiments? Because right now they're saying the stock of available balances on the market is about 200 billion US dollars, which if we convert at say the official rate, it's amounting to almost 60 million US dollars. So in their mind, they're saying it's actually an amount that they can successfully mop up from the market and then create such a shortage that people will be running around looking for Zim dollars. Is that, do you share similar sentiments? And if that is the case, is that sustainable?
So I can understand the intention of the policy, but in terms of what's actually happening on the ground, firstly, they haven't executed well. One of the things that Treasury announced was that all the taxes that Zimbabwe currently collects are going to move to Zim dollars, and the idea being to create demand for the Zim dollar. But unfortunately, the statement hasn't been followed through with a statutory instrument. So basically, anybody who's got a business that has US dollar sales for which they are liable for VAT, or if they're running a US dollar payroll, or if they've got any taxes that they were ordinarily paying in US dollars, they do not have the option to pay in Zim dollars, notwithstanding the statement from Treasury, because the statutory instrument hasn't actually been passed through. So those taxes are all still being paid in US dollars. So then, if there's tight Zim dollar liquidity, the question arises, what do you need Zim dollars for? If you're not paying any of your taxes and duties in Zim dollars, what does the ordinary person need Zim dollars for that they can't do with US dollars? If you have US dollars and you want to buy groceries, you can walk into a supermarket and buy your groceries in US dollars. In fact, the universe of things that you can do with Zim dollars has been shrinking for a long time, to the extent that if there's no Zim dollar liquidity, it actually doesn't force people to offload US dollars in search of Zim dollars, because you can get by just fine without Zim dollars. So I think what the only impact tight Zim dollar liquidity is going to have is it will slow down the devaluation of the Zim dollar. Okay. And we've seen this before, where the rate has run away, and then the Treasury and Central Bank have stepped in with some policy action to arrest the devaluation. And sometimes the currency is even strengthened in the short term. But if you actually zoom out a little bit and you look at a graph of the Zim dollar valuation versus the USD over any period longer than 6 months, it's just going in one way. And I think what we are in the middle of is one of those troughs, one of those small troughs in the long-term trend, where to the extent that this Zim dollar liquidity remains tight, the rate might pull back or not be stable. But I don't think that we've addressed the root causes of the devaluation over the longer term, and I think the trend is just going to continue.
So maybe going back to our market as we come to the close, what should institutions do? What should investors do? So you look at institutional investors like your pension funds and asset managers, given the policy environment and the developments that we are seeing on the markets and the economy, what should they do in terms of asset allocation, in terms of how they should be able to preserve value or defend the values on behalf of their clients?
Yeah, so I think the strategy hasn't changed. Nothing that's been announced, none of the policy actions actually impact what is the most sensible strategy for anybody managing money, which is to allocate as much of your portfolio as is possible to non-monetary assets that are not going to be affected by the devaluation of the Zim dollar, that are ring-fenced against inflation. So whether it's property, whether it's equities, alternative investments, anything that will not be affected if the Zim dollar continues to devalue, or indeed if the Zim dollar stops being functional completely.
And I'd said the last, but I also still pose another one. Is it a bad thing when we are seeing more transactions in US dollars, which sort of offer stability, as opposed to the Zim dollar, where there's this worry about inflation and losing value? What is it that maybe the policymakers are not seeing, and why are they so fixated on having the Zim dollar still part of our transacting currencies?
Well, I'm actually vexed as to the affinity for Zim dollars by the policymakers, because the last 5 years we've clearly failed to manage the local currency, and it seems to me everybody would be better off if we actually dollarized. I think even from the point of view of the state, in terms of their real revenue, if we were in a dollarized situation, they'd actually collect more and they'd actually have more fiscal space than they do in this muddled two currency regime. So I'm very curious as to the the motivation for the continued use of this local currency, which has for the most part been a headache.
Thanks so much, Fufaro. And there you have it. Do you necessarily agree that everyone will be better off with USDs, or you still think that the Zim dollar still has got a role to play in our economy and transacting? We want to hear from you. Please remember to send through your comments, to like our pages, and also subscribe. Otherwise, that was the program that we had today. Comments, likes, and subscribes to our different channels. Have a pleasant day, and see you next time.